Another big story that we're watching today, China gearing up to use its dominance in rare earth minerals against the U.S. in the escalating trade war. Several Chinese media reports say Beijing is considering cutting exports of the commodities to the U.S. Joining us now, Yahoo Finance's Aikiko Fujita with the latest here. And China used in not an official statement, but in some published reports, some unusual language.
That's right. That report came from the People's Daily, which is the communist paper. But let's back up a bit here to talk about what exactly we mean when we talk about rare earth minerals, because there are 17 metals that we are looking at that could certainly be affected if China decides to restrict the access for these. We're talking about minerals like cerium, which is used for batteries, terbium used for flat panel displays, and you see some of the others there, all totaled 17 different materials we are looking at. Now, they are critical components for defense, the auto sector, our electronic devices, and rare earth minerals make up just a small portion of the $420 billion deficit in goods the U.S. has with China, but they hold significant value because China produces an overwhelming majority of these materials globally. Roughly 80% of these metals that are imported into the U.S. comes from China, and recently we have seen the Chinese leadership threatening to weaponize their hold on this market as part of the U.S.-China trade war. Now, you pointed to some of the comments that we got from Chinese media overnight. So let's take a look at that. The People's Daily state media putting out an op-ed with a headline that said the U.S. should not underestimate China's ability to fight back. And here's where the English translation is. Waging a trade war against China, the United States risks losing the supply of materials that are vital to sustaining its technological strength. Goes on to say that China has plenty of cards to play. Now, the Chinese language article of this used a phrase that means essentially, don't say, I didn't warn you. And a lot of scholars pointing to this because this carries a significant historical reference here, because it was the same language the Communist Party paper used before it went to war with India in 1962, and conflict broke out with Vietnam back in 1979. Now, since that article was published, the editor of the Global Times, which also has close ties to the Communist Party, put out this tweet saying, based on what I know, China is seriously considering restricting rare earth exports to the U.S. China may also take other countermeasures in the future. Now, we should point out these are all just veiled threats so far, but if China decides to play this card in retaliation for what the U.S. has done to Huawei so far and restrict these minerals, the U.S. has very few options to play here. There is just one facility in the U.S. out of Mountain Pass, California, that is mining and processing these materials at full scale. And Citi put out a report saying export restrictions of these materials could impose adverse consequences in U.S. production of electronic goods with no obvious quick substitute of similar scale. We should point out over in the Asia session that leverage that China holds and the messaging coming from the Chinese media really led to a rally of some of these rare earth processors, and you see right there, China Northern up more than 8%, China mini metals up more than 10% though, so they've certainly seen a big rally on the back of that.
Aikiko, very quick follow-up. Any chance that if they were to limit the export of rare earth minerals, it would backfire on them? What would that look like?
Well, you know, there's different ways to restrict, and a lot of analysts will say, look, it doesn't have to be a complete ban for China to actually be able to use this leverage. It could be raising the prices of these materials. You know, what options does the U.S. have? There are other countries that do process and produce these minerals, like Japan, like Australia. But at the end of the day, China has more than 80% of the market share, though that would really shake up the supply chain significantly.
Aikiko, thank you. We are going to continue discussing this with the panel. Lending Tree Chief Economist Tendai Kapfitsi and Yahoo Finance's Scott Gammer here. Tendai, who do you think stands to lose the most in the manufacturing world if China were to play this card?
I guess it would be U.S. manufacturers of these high-tech goods, which I think one of the premises of the trade war is that we're trying to bring back some of this high-tech manufacturing to the U.S. Obviously, if you deny these people the resources to do so, then they can't do so.
The language that Aikiko pointed out is certainly getting a lot of attention as well. And the stock market is down. It's not down that much. We're not even seeing 1% declines, but still, that language and the historical precedent for it is giving some people pause.
Yeah, I think Aikiko brought up a great point, which is that these are veiled threats.
Yeah.
And so, look, let all the rhetoric come out, let this come to a crescendo, and then we can finally move past this. In fact, one analyst this morning told me that he thinks the rhetoric is coming to a crescendo, and that's kind of what you need to get to sort of the end of the road, to get to some sort of a deal. I think a threat is much different than action. And Julie, to your point about the market reaction to all this, yes, stocks are down not even 1% today. They were down about 1% yesterday, so over the past 2 days it has been a bigger decline. But the market reaction is not just about trade today. I mean, if you look under the hood, the worst sector in the S&P is healthcare. The worst stock in the Dow is J&J. And you've got some stock-specific issues there, J&J dealing with some of those opioid lawsuits. So it's not all about trade if there's any good news in this day.
So if this analyst you're talking to says this is coming to a crescendo, what does that look like for an investor who's watching this rush to safety? At least when you look at people who are buying bonds, we're watching the 10-year, come down.
And a couple points there, because the 10-year yield is also being driven by some of the other sovereign bonds across the globe. So you've got yields on the German bonds moving deeper into the red as some of those nationalist political parties gain steam in the elections in the EU over the weekend. So you've got EU investors buying safe havens, not just in the EU, but also in the US. But back to what this analyst told me, he basically said, look, we're down 5% in the markets over the past month. Now is the time to look at your shopping list and find those high-quality companies that were sold off for really no other reason other than trade worries, which is not exactly the most constructive reason to be selling stocks.
Tendai, go ahead, sorry.
No, I guess that sounds optimistic to me. This trade issue has been ongoing for almost 2 years now. It only ever seems to escalate. We have yet to see a de-escalation. So I don't know, maybe we're getting to that point, but I'm not sure. And then I think another thing this rare earth episode brings to light is just the complexity of global supply chains. So it's really difficult to kind of have this binary, we're going to narrow the trade deficit without a true understanding of how product flows around the world. And I think one of the most interesting things that's emerged is that Chinese exports to the US have declined pretty significantly. We're their largest trading partner. But Chinese exports overall have not declined, which to me suggests that a lot of product is being rerouted and is probably still coming to the US from China anyway.